Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Uni-President China Holdings Ltd. Annual Report. Uni-President China Holdings Ltd. offers a diverse range of businesses and services. At its core, the company manufactures and sells various beverages and food products, including instant noodles, tea drinks, juices, milk tea, coffee, bottled water, and bottle-canned drinks. In addition to these primary offerings, Uni-President also engages in wholesale activities for prepackaged food and dairy products, as well as forage and fertilizers. The company further expands its portfolio by manufacturing and selling mineral water and seasonings. Beyond its core business, Uni-President is involved in various other sectors, including trading, leasing, real estate development, catering services, management consulting, and human resource management. These diverse activities demonstrate the company's commitment to diversification and expansion into new markets. Unfortunately, I don't have access to the text you provided. However, I can still provide a general essay on what might cause a stock price to remain stagnant over a period of time. The stability of a stock's price is often influenced by various market and economic factors. One possible reason for a lack of significant change in Uni-President China's stock price over the past year could be a stable industry performance. If the company has maintained its market share, revenue growth, and profitability, investors may not see any compelling reasons to buy or sell the stock. Another factor that could contribute to stagnant stock prices is a lack of innovation or disruption in the industry. If Uni-President China's products or services are no longer seen as competitive or innovative, investors may lose interest, leading to a stable but unchanging price. Additionally, external market factors such as economic downturns, changes in government policies, or global events can also impact stock prices. If these factors are not significantly affecting the company's performance, the stock price may remain relatively stable. It is also possible that Uni-President China's stock price has simply reached a plateau due to its current valuation and market expectations. In this case, investors may be waiting for new developments or catalysts before making any significant changes in their investment decisions. In conclusion, there could be several reasons why Uni-President China's stock price has remained relatively stable over the past year. A closer examination of the company's performance, industry trends, and external market factors would provide a more detailed understanding of this phenomenon. Uni-President China Holdings Ltd. maintains a market capitalization of $34 billion, broadly in line with the industry peer group. Uni-President China Holdings Ltd. trades at a lower price-to-earnings ratio of 14 times and a higher price-to-book ratio of 2.36 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 43% of total assets, suggesting a balanced approach between risk management and capital efficiency. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 5.89%. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. The primary drivers of revenue growth or decline can be identified through a thorough analysis of the extracted summaries. On one hand, several factors have contributed to revenue growth. The beverages segment has grown at a compound annual growth rate of 9.2% since 2020, driven by product innovation, robust competitiveness, and brand influence. Additionally, value-based marketing strategies, digital empowerment, and collaborations with online platforms have also boosted revenue. Furthermore, the company's focus on core mass products operation, increase in post-tax profits, and expansion into new markets such as catering channels have all contributed to revenue growth. The launch of new products, offline events, and exhibitions have also helped to drive sales volume. On the other hand, a decline in revenue has been observed in certain segments, including food and others, which can be attributed to various factors such as decreased demand or competition. However, it is worth noting that some specific product lines have experienced steady growth in sales volume due to effective marketing campaigns and product innovation. For instance, Uni-President Lautan pickled cabbage and beef noodles has seen a significant increase in sales driven by themed campaigns and strengthened trust barrier. Similarly, the King of Tomato has benefited from product innovation and limited editions, while Imperial Big Meal has experienced high double-digit growth due to its focus on the middle class and refinement of product strength. The company's financial performance has shown a positive trend in recent times. Net income has increased by 10.9%, reaching RMB 20,050.2 million. This growth can be attributed to various factors that have contributed to the improvement of profit margins. One key indicator is the group gross margin, which has seen an increase of 0.7 percentage points to 33.2%. This suggests that the company's ability to maintain a healthy pricing strategy and control costs has been effective in boosting its revenue. Additionally, EBITDA earnings before interest, taxes, depreciation, and amortization has also shown a significant improvement, rising by 6.6% to RMB 3,860.6 million. This indicates that the company's operational efficiency has improved, leading to higher profitability. The increase in net income and profit margins can be attributed to various factors such as cost control measures, efficient pricing strategies, and improved operational efficiency. These factors have collectively contributed to the company's financial growth, making it a positive trend for investors and stakeholders. The company's debt level and interest expenses have undergone significant changes. Initially, the non-current assets debt showed a modest increase of 1.4% from RMB 14,267,483 to RMB 15,152,143. However, this growth is overshadowed by the substantial rise in total financial liabilities, which increased by a staggering 272.3% from RMB 290 million to RMB 1,079.7 million. In terms of interest expenses, there was a notable increase from RMB 180,485 in 2024. Furthermore, net interest expenses also saw a significant improvement, decreasing from 72,206 to 23,536. This suggests that the company's financial management has led to better interest expense management. The likely increase in interest expenses due to floating interest rates on all financial liabilities is a concern, but it is essential to consider this in the context of the overall debt level and financial performance. Management is optimistic about the company's outlook, citing strong revenue growth in 2024 with a significant increase in segment profit. This growth is expected to continue in the long term through strategic investments in non-current assets such as marketing, production line equipment, and environmental protection equipment. In terms of operational strategy, management plans to optimize efficiency by outsourcing production to external manufacturers and focusing on core operations. This approach aims to improve revenue, profit, and growth while minimizing financial risk exposure. The company will also continue to focus on its core business of manufacturing and selling beverages and instant noodles. Overall, management strategy is centered around long-term growth through investments and operational efficiency, with a focus on controlling risks and adjusting expenses prudently. There is no notable activity to report on acquisitions and divestitures. The company has not engaged in any significant transactions involving the purchase of other businesses or assets, nor has it sold off any major divisions or subsidiaries. This suggests a stable and focused approach to business operations, with no major changes to its portfolio or structure. The company has a history of rewarding its shareholders through dividend payments. In the latest financial report, it was announced that the final dividend for each share is set at RMB 47.47 cents. This amount represents a significant payout to investors, totaling approximately RMB 1,050.2 million in total dividends. That concludes the financial summary for Uni-President China Holdings Ltd. Feel free to comment below, and I will be happy to answer them when possible.